look at the York lease report. So for York region, this is all types of properties, all bedroom types. We're just looking for a general idea of where prices are headed. So month over month, we're down 3.6%. We went from $2,750 a month to $2,650 a month. The amount of transactions was up 0.4%. New listings for leases were down 10.1% month over month. Days on market that the lease was on the market for went from 22 to 20, and the amount of terminations, so these are terminations, maybe they're not getting the price they want, maybe it's been sitting on the market, they just want to get things refreshed, they'll terminate the listing and put it back on the market. So that was actually, the amount of those was down month over month, as a lot of people probably have just refreshed, repriced things come January, and they'll probably wait till March or April, and maybe they'll do another adjustment if they're still in the market. So that did fall 15.6%. Now, if we're looking year over year, prices are actually down 10.2% since what we saw last February. We were getting prices of $2,950 on average, and that has now dropped to $2,650. So we're starting to see an easing in rents for the average properties on the market right now. Transaction volume has gone up 2.6% year over year. New listings has increased quite a bit by 23% year over year, and that's sort of what's having an impact on the market. We're starting to see, those additional listings start to pile up on the market. Landlords need someone to pay the rent. If not, it's them. So there are some price adjustments being made with the average rental price. Now, there are some pockets that are holding up extremely well, but there are some housing types and room types that are definitely starting to see a far too much active listings in those pockets, and they are the ones that are starting to really start to drive some prices down. Days on market is down 4.8%, and termination year over year is 14.4. So let's look at active listings. Like I said before, active listings are significantly up over the 5-year period, 2,497 as compared to last year's 1,808. So a lot more options out there. That will have an impact on prices, and we'll see that. So lease volume, the number of properties being leased, is actually on the high side. So 1,043, which was up from last year. This is a good sign. It's still showing that there's some demand in the market, and it is soaking up some of that excess, the excess listings. As we can see here, we are starting to come down, but we are quite a bit above where we were in 2024 in terms of the amount of new listings. 1,550 last year, 1,906 this year. If we're looking at months of inventory, we can see we've been quite high, but we've been higher than this before. Between 2012 and 2016, maybe even 2018, we've seen months of inventory for the rental properties on the higher side. We're starting to build up into that range again.